Hi guys, welcome to this week's market opportunities. As you can see, different background here, and that's because I'm overseas currently, but I'll still bring you guys the content. So for this week, we'll go over our usual market overview, and then we'll go into some market opportunities for you guys this week. Before we begin, here's our usual disclaimer. Alright, let's get into it. The markets have just experienced their worst week since the rally from the pandemic that began in March 2020. So for the past week, the Nasdaq has dropped 7.6% and is almost 14% down from its all-time highs, and is approaching bear market territory at 20%. It has also had its worst start to a calendar year since 2008. Both the Dow and the S&P had their worst week of losses and closed with 3 consecutive weeks of losses as well. The S&P 500 currently sits 8% from its all-time highs. The huge push to the downside this week has been a result of rising rates, which has made the lofty valuations of technology firms look less attractive. Huge firms are also not able to hold their weight and has led to further declines in the market. Disappointing earnings from Netflix has led to them sliding almost 22% and exacerbated the sell-off in the markets this week as well. Even the VIX index does not show much promise. The VIX index actually measures market volatility over the next 30 days. So if we look at how the VIX index is important in this scenario, it is because the VIX index has rallied over the past 3 weeks to almost 29 on Friday. And traders have been increasingly buying hedging positions to protect their trades. And even those days when the market has rallied, those traders have not cashed out and kept hold of their protection as well. The futures price of the VIX index is also increasing through February and March. Usually when there's a sharp market correction, the VIX index shoots up. However, we've seen over the past couple of weeks that the VIX index didn't shoot up, but it's actually gradually going up. So it's actually swelling, and this shows that the correction might be longer and here to stay, and longer than previously expected. In the upcoming, there are some big market events that we need to take note of. On Wednesday, Powell will address the media after their meeting with the Fed regarding the bond buying purchase program that starts on Tuesday. The Fed is also not expected to hike rates in the meeting, but should provide more information regarding their bond buying and tapering program, which is expected to end around March. And the Fed will also move to reduce their $9 trillion balance sheet, which actually might signal more potential policy tightening. For earnings, half the Dow and big tech firms like Microsoft, Apple, and Tesla will be reporting next week. And key economic reports to look at and pay attention to will be consumer confidence on Tuesday, Q4 it runs real GDP on Thursday, and consumer sentiment on Friday. Alright, now let's move on to some market opportunities. Our first stock for this week is Oasis Petroleum Incorporated. They specialize in hydrocarbon exploration and hydraulic fracturing. So this is Oasis Petroleum Incorporated's chart. So if we look at the chart, we can see that currently the stock price has retraced to an area of value here, where we can see a horizontal support level, which a previous resistance has now turned support level. So the stock price is back here once again, and this area is in confluence with the 50 EMA, which is the purple line here. You can see bounced off once, twice, 3 times, and it's now back here for a 4th time. So we can see a potential rejection candle of lower prices around this 50 EMA. It can be a good entry signal for us, and we can just set our stop loss maybe 1 ATR below these lows, maybe about $120 or so, and our target profit can be near the recent all-time highs of about 142, or if you want to ride the trend, you can actually push it higher and trail your stop loss. So that's up to you as well. Yeah, so this is OAS. Moving on to our second market opportunity, it is Enerplus Corporation. They are one of Canada's largest oil and gas producers. So this is the chart of ERF, or Enerplus Corporation. So if you look at that chart, you can see that they recently broke out of a range here of very strong resistance level. Once, twice, 3 times, 4 times. And there was no earnings or whatever which pushed it past the resistance. So it was just pure stock momentum, as we could see the consolidation right here. So now the stock price has retraced back to this previous resistance level, and it might turn into a new support level because short sellers who saw this resistance level might have shorted the stock but now have been caught, and as it retraces back to this level, they might want to net their short trade. So in that sense, they would create buying demand for the stock because they need to buy back the stocks that they have shorted, and as a result, this resistance level might now turn into a support level. Our third and final market opportunity for this week is Signature Bank. So based in New York, they are a full service commercial bank and they specialize in equipment financing and leasing. So this is a chart of SBNY, Signature Bank. So if we look at this chart currently, you can see it's in a nice, beautiful uptrend, and it's recently sold off massively after its earnings back to this area of value right here. So this area of value, a previous resistance level, can and potentially become a support level. So the reasons are the same as before, and it is always very good to buy or enter a position when there is a strong power move in any direction into an area of value. So in this scenario, there's a strong power move to the downside due to their bad earnings and into this area of value where there might be a potentially very good risk to reward opportunity available for us. So even at this level, you can see that there's the confluence of the 50 EMA, the purple line, once, twice, 3 times, 4 times. The stock price has bounced off it. And as such, due to this huge power move, this risk to reward is very favorable for us if we can get a rejection candle of lower prices right here. So your stop loss might be somewhere around $310. And because of this strong power move, there's no obstacle between your all-time highs and your current entry point. So your target profit can be set as high as the all-time highs at around $370 safely. And that's all the opportunities we have for this week. Here's a summary slide for you guys to see all the stocks that we mentioned in this video. Please like, share and subscribe, and as always, may the markets be in your favor, and I'll catch you in the next one.